Hello there. Welcome back to grade 11 accounting. In this video, we want to look at a term one controlled test that is of say on March 2023. So we are going to look at a question paper from the province of Limpopo. So I'm going to our question. We're going to look at the question on bill reconciliation, and our question has got 20 marks and requires you to spend on average 18 minutes. So the question reads, we have required on the first part 1.1, give one reason why it is important for a business to prepare a bank reconciliation statement each month. So remember, a bank reconciliation, we are trying to reconcile the balances between two documents. We've got a bank account in our ledger and also the bank statement. So we have the bank statement and the bank account. So those are the two documents that we want to compare their final balances. If they are the same, they are supposed to be the same because the same elements of the bank account in the ledger are the same elements that we have in the bank statement. So if there is a difference now, it means there are some errors which transpired during the period in terms of recording. So we need to correct those errors by preparing a bank reconciliation statement. So basically, you see now the importance of preparing a bank reconciliation that we want to correct some errors or mistakes that transpired during the period. And also we can use it as an internal, so you would see that we can use it as an internal control measure. And also we can also employ it as a way to deter fraud. So it can easily detect also if there's a fraud that is taking place, it can be detected by that bank reconciliation statement. So we have those reasons in a nutshell being summarized in our answer section. So we can just try to refer there and see the reasons that we have here. And the first point is saying improves internal control. That is minimize fraud or error because our records are checked to an external source. So second one, errors or dishonesty at an early stage. And the last one, to reconcile the bank statement balance with the bank account balance. So these are the reasons that we have. But our question obviously is asking for one reason. So we can just pick one between the ones that we have there. So we go back to our question. We go to 1.2, which is calculate the correct totals for the cash receipts journal and the cash payment journal for May 2023. So we are going to calculate that using the space that we are given in the answer section, of which we are saying that this is the space that we have on 1.2. So we've got the column for cash receipts, and then we've got the column for cash payments and cash payment journal. So we are going there and try to see which ones are going to be elements of cash receipts journal and which ones are going to be elements of cash payment journal. So obviously, if you go back, you'll see that we are going to try to locate those entries that were supposed to be or that are appearing on the bank statement, but they are not there in the journal. So we can just update that by filling in the spaces that we have under CRJ and CPJ. So on the first information that we have, it reads at the end of the previous month, 30 April 2023, the following items were reflected in the bank reconciliation statement. So we are given a favorable balance in the ledger, 6,325, and then we have got some information that we are given. So also you need to go through what you are given in the question. We also have information 2, information 3, which you need also to go through, information 4, and finally information 5 becomes the last item that we have. So going there, remember we are trying to update our CRJ and CPJ. So I'll try to find out where we can find that information that we can be able to send them. So the first information is saying at the end of the previous month, 30 April 2023, the following items were reflected in the bank reconciliation statement. So obviously, all the items that we are seeing on the bank reconciliation statement at the end of the last period, that is 30 April 2023, they were already in the journals, and obviously we would want to see if they are now appearing in the recent bank statement. So basically we try to go through, we're given a favorable balance in the ledger, and then we're given a favorable balance on the bank statement, which which we are not so much concerned with at this point. We got outstanding deposits dated 30 April 2023, 12,000. So these were the elements of the previous month's bank reconciliation. So we have this information, and then information two is giving us the provisional totals in the journals, which we have 70,600, which we are now concerned with. So we start with the cash receipt journal, which is 70,600, and the cash payments journal we've got 105,320. So these are supposed to be our opening balances. Here, remember, here we've got 76, 05320 for cash payments journal. We are seeing it here again as our getting apparent as a provisional total. So from there, we can now try to see in terms of items which are supposed to update in those journals reflected on the bank statement, but not in the journals for May 2023. So basically, this is information that we are looking for. We want the information that is appearing on the bank statement, but not in the journals. So the first one is saying direct deposit by tenant K Quella 7,400. So we've got a deposit that is there on the bank statement, but in the journals not appearing. So basically, we need to update this entry in our cash receipts journal. Remember, it's supposed to go to the cash receipts journal, which is the CRJ. Then we go to the cash receipts journal, and you are seeing that it's for K Quella. So we are just going to indicate as such. And the amount that we have is 7,400. So in that, we go to the next one, which is going to be bank charge is 500. So bank charge is obviously they reduce the bank balance, so they are supposed to be on the credit side. They are supposed to be on the credit side of the bank account in our ledger, and the credit side represents the cash payments journal. So we go there and put it on the under the cash payment journal. So we're saying bank charges. The figure that we have is 520. And then we can go to the next part whereby we are saying this deposit, obviously this is an income, and obviously it has to go under if it's an income, we are receiving money, so it's cash in 619. So we have interest on fixed deposits. So we are just applying the fixed deposits. We have it here, 700. So we come here and put our 700. And go back and check in terms of the next one, which is now the interest on overdraft, 820. Remember, an overdraft is a situation whereby we, as a business, we've grown more money than the balance that we have in the bank. We've got, for example, 100 rands in your bank, then we go and withdraw 150. It means we've overdrawn with 50. So the 50 rand becomes the overdraft. So basically, so it means this is interest that is charged on overdraft. Obviously, it becomes an expense to the business. So it's an outflow. So we're supposed to show it on the credit side under the payment. So we've got 810, which is going to be our interest on overdraft. So come here, we say interest on overdraft. Interest on overdraft, so we are saying the amount that we have is 810. So come here, 810. We go to the next one, whereby we have a stop order in favor of Rama Insurance, 6,860. But out of that 6,860, inside that we have got 5,500 for the business insurance and the remaining for the owner's personal insurance. So we can start with 5,500 for our business insurance. So we are saying insurance under payment. So stop order, remember, it's money that is being withdrawn from a bank account. It's a payment that is being made. So it's an outflow again. So it's supposed to be on the credit side in our ledger in our bank account, but on the bank statement it will be on the debit side. So we are saying it's a payment, and that's the basic, and we are supposed to put it under cash payment journal, and we are saying 5,500 insurance. So we come here. So this is what we have. Then we go to the next one, which is going to be so we see that inside 6,860, we have 5,500, which means the remainder is going to be the owner's personal insurance. So it means this is a private expense, and we regard that as our drawings. So they say 6,860 is total. Then you subtract 5,500 to get the figure for our drawings. So we try to calculate there, you're going to get 1,360. So we got 1,360. So this is the figure for drawings, and it's supposed to be other payments again. So we are saying drawings. And the figure that we have is 1,360. And then go to the next part, whereby now this becomes the last one that we have on item 3. Then we go to item 4. We try to check again if there's anything that needs to be updated in the journals between cash receipt journal and cash payment journal. So the first item that we say is EFT number 58565 for repairs recorded in the cash payment journal is 1,570, but is 1,750 on the bank statement, and the bank statement is correct. So it's now clear that the bank statement is what is correct. The bank statement is correct means we are not going to enter anything in the bank reconciliation. Remember, if the bank statement is incorrect, if the bank statement is not correct, it means we have to correct it in the bank reconciliation. But if it's correct, it means the bank reconciliation statement is not going to be affected. But what is going to be affected is the journal. So which journal now? This is EFT number preferences for repairs recorded in the cash payment journal. So this is under the cash payment journal. So we have 1,570 instead of 1,750. So it means we entered in the cash payment journal a smaller figure. So we need to find the difference so that we can 1,750, which is correct. So we are saying 1,750, and then subtract 1,570. 1,570. So if you subtract there, you're going to see that the figure that we are going to get is 180. Or 180. So 180 is the figure that you're supposed to put under cash payment journal, so that our figure goes with the correct figure. So we go under cash payment journal, and we are saying repairs 180. So this is what we go to the next item. This is a deposit of 4,000 appeared in the bank statement on 1 May 2023, but it did not appear in the cash receipts journal of May. But did not appear in the cash receipts journal of May. So what does it mean? It means there's a deposit of 12,000 which appeared on the bank statements on 1 May, but we are seeing that that deposit is not appearing. It's not on the, but not on the bank statement of May. So which means we need to correct that, and that 12,000. So what it means is this deposit it was corrected on the previous month's bank reconciliation. So that's why it's now appearing on the recent bank statement. So obviously, when it's appearing on the previous month's bank reconciliation statement, it means it was already adjusted in the journals, and then it was then adjusted in the bank reconciliation statement of the previous month. Then when it's appearing on the latest bank statement, which means it's not going to affect our journals. So that type of a transaction does not affect our journals, and also does not affect the bank reconciliation statement. So if you go back to the bank reconciliation statement of the previous month, you would see that we are having it here, outstanding deposit dated 30 April 2023, 12,000. So it was on the previous month's bank reconciliation. So the fact that it was appearing on the previous month's bank reconciliation shows that it was already in the journals, and then it was put in the bank reconciliation statement of the last month. Then when it's now appearing in the current bank statement, it means it does not have any effect both in the journals and in the bank reconciliation statement. So basically that's what works. So we can just ignore that one of 12,000. It has no effect. So we go to the next one, which is a deposit of 20,295 dated 20 May 2023 appeared in the cash journal for May, but not on the bank statement for May. So there's a deposit that transpired 20 May 2023. Remember, the bank reconciliation statement is being prepared at the end of May. So this deposit, the assumption is that the deposit is going to be processed. That's why it is already appearing in the cash receipt journal. So we need to put it in the bank reconciliation statement. So we are going to transfer this one to the bank reconciliation, which is 20,295. So we go to our bank reconciliation. We go to our bank reconciliation and see that that's our bank reconciliation. And obviously, in our bank reconciliation, we are going to start with the opening balance. We can simply just put the opening balance, whereby we are having the opening balance at the end, which is saying the bank statement shows an overdrawn balance. Shows an overdrawn balance of 34,720. on 31 May 2023. So this an overdrawn balance means it's a negative balance. And the negative balance of the bank statement will be a debit balance. It will be a debit balance. So a favorable balance on the bank statement is a credit balance, but an overdrawn or unfavorable balance will be a debit balance. So we are going to consider statement as a debit balance. So we come here, we see balances with bank statement, balance as per bank statement. And then the figure that we have, we can just maybe try to reconfirm is say 4,720. We come here. We are saying you're putting it on the debit, 34,720. 720. And from there, we can now be able to put that transaction of a deposit which is outstanding. We can put this one in an outstanding deposit. Which when it's an outstanding deposit, remember deposit should appear on the credit side of bank reconciliation. So we are putting it on the credit side of the bank reconciliation, whereby we are saying credit out. We are not crediting outstanding deposit, so we can say credit outstanding deposit. We have 8,000. 295. So this is what we following EFT payments appeared on the cash payment zone. This is CPJ, cash payment zone of May, but not on the bank statement. So they are EFT payments, and obviously if they are EFT payments, they are supposed to be shown on the debit side of the bank statement. But the statement is saying they are not there. So we need to put them in the bank reconciliation on the debit side. So we are just saying debits outstanding EFTs. Debit outstanding EFTs. So we can just come here. We are saying debit outstanding EFTs. We have the EFT numbers that are stated there, which you need to highlight. We got number 654, number 654. So we can just indicate it 654, and the amount that we have is 2,800. We have another one which is 674, 2,520. And we have 674, which is 2,520. Right, so this is what we have. But if you on the outstanding EFTs, we also have to go back to the previous month's bank reconciliation to check if there is an outstanding that also needs to be put in the recent bank reconciliation statement. So if you come here, you would see that we are given outstanding EFTs here, 519 and 54 did not appear on the May bank statement. So it means this one appeared, 4,300 appeared, but this one did not appear. So if they just leave it there, it means it has to be reinstated again in the current bank reconciliation statement. So we're going to take it EFT 519, 8,920, and put it there. So we're saying we have another one, which is going to be our 519, 8,920. So that is what we have. So I will try to see again in terms of another that we might have another transaction. So that was the last item that we have. And then we have got the bank statement shows which is the initial balance that we started with in the bank statement as our opening balance. So that's what we have there. So from there, we are supposed to add them to get our totals in the journals. We are supposed to add the total of cash in the journal by saying 70,600 plus 7,400 plus 700. We are going to get 78,700. And then we add up 110 plus 5,500 plus 1,360 plus 180. You're going to get 113,690. So on 1.3, remember it needs us to calculate the bank balance. So we are going to use our opening, our balance that we calculated in the journals. And obviously we need to go back to the previous month's bank reconciliation statement, which we have at the beginning of the question. So the initial balance that we have that will be given here is favorable balance in the ledger, and then we are given the other one is favorable balance of the bank statement, 12,545. So we are going to take the favorable balance in the ledger, 6,320. So we take this balance, 6,325. So that was the previous month's balance, and then we take it, we adjust it with the totals of the journals that we got. So we come in here, we are saying 6,325, 6,325. And then for receipt journal, this is for the CRJ, which is supposed to be a positive. So we are saying plus 78,700. And then other payments, we're supposed to subtract it, 113,790. So we calculate it like that to see that the final figure that we are supposed to get, we calculate it correctly, we are going to get 28,665. So this is going to be the bank balance. But obviously, this bank balance should be the same with the one that we are going to get in the bank reconciliation statement. So this is our bank reconciliation statement. So we have to balance it. So by balancing it, we add the total of the debit and the total of the credit and see which one is greater. But if you look at it there, by mere looking, you can see that the debit side is a greater total. So if we add the total of the debit, 34,720 plus 2,800 plus 2,520 plus 8,920, you are going to get a bigger total of 48,960, which is going to come at both sides in between the double line. And you get the balancing figure by saying 48,960 minus 20,295, which is the total of the credit side. And you get the balancing figure, which is supposed to come here, is 28,665. And here, the description that we are given, this is now going to be balanced as my bank account. So remember, our balance that we get in the bank reconciliation statement should be the same with the balance that we get in the bank as the bank account balance, which is the balance that we got here. 20,665 is the same which you are having here, 20,665. So the description that we are going to give here should be the description within the context of our bank account. So we are saying here, balance as per bank account. And 20,665 here by in our bank reconciliation statement is a debit balance. When we are just trying to interpret it, here we say this balance that we are having here, it's a debit balance. Why is it debit balance? It's a debit balance because we are having our CD on the credit, so our BD on the debit. So where we have our BD is the representation of the balance. So we've got a debit balance. So on the bank, it's a debit balance on the bank statement. But in the bank account, it's a credit balance. It becomes the opposite. It's a credit balance. So this is what we have. So so you see that the figure that you got here, is 28,665. So if you add 6,325 plus 78,700 minus 113,690, the 20,665 that you are getting, it will be a negative figure. It's a negative figure here, so we can just show by putting a negative. Or you can just leave it in brackets to show that it's a negative by saying 28,665, then you put your brackets, show that it's a negative figure. So brackets are a substitute of negative sign. So this becomes the completion of our bank reconciliation statement. So very important for you to take note in terms of this negative balance. So in our bank account, it means it's a credit balance. But if you go to the bank reconciliation statement, it will be a debit balance. So a debit balance on the bank reconciliation statement also is a negative balance. So basically, negative or unfavorable. So this is what we have. So thank you for listening. Hopefully the video was helpful. Let's not forget to subscribe and share to our channel. Let's not forget to share the link to our colleagues who are doing grade 11 accounting. More typical examination questions will be uploaded on this channel. So let's stay tuned. Let's meet again in the next video.